Hi, this is Scott Ryan here, and I'm going to talk to you today about the HARP Mortgage Program, specifically for Georgia homeowners who may need a little help in keeping their payments down and who maybe have lost a little bit of equity in their properties and don't think that they can qualify through regular means. So I'm going to talk to you about why it is that you should do it, and then I'm also going to tell you what it is that you need to have in order to qualify to do it. I'm going to show you how to reduce your mortgage payments by over $1,000 per year with the HARP program. The HARP Refinance Program was set up to help those homeowners whose property values slid dramatically over the last several years to below or almost below their mortgage balances. Introduced in the very first months of Barack Obama's presidency, the Home Affordable Refinance Program was established to permit homeowners who had underwater home loans where the home mortgage value is greater than 80% of the property's value. This means if your home is worth $100,000 and your mortgage has a balance of $300,000, you're still eligible for the Obama Refinance Program. According to the Federal Housing Finance Agency, borrowers who have already taken advantage of the program are saving an average of $1,923 per year. Very quickly, let us discuss several things you need to be eligible for the HARP Refinance Program in Georgia. Number one, you haven't made a payment more than 30 days late in the past 6 months and no more than one late payment in the past year. HARP is for borrowers which even during the very difficult times and reduced private property values made their installment payments in a timely manner. Why should they not be able to obtain historically low mortgage interest rates? It wasn't their fault just about everything went straight downhill. Thus, Obama made a decision to intervene and support these salt-of-the-earth type women and men. 2. You owe more on your mortgage than your house is worth, or your current loan-to-value ratio is over 80%. This is certainly the meat of the HARP program. Real estate prices have plummeted, and you may possibly have a home mortgage that could be reasonably estimated 125% or even more of the value of your household. This sort of funding is unusual in the history of standard lending in the United States. Drastic steps needs to be taken for drastic challenges. 3. Either Fannie Mae or Freddie Mac is required to currently possess or back your property loan. You could be worried that basically your current loan may not qualify this way. In all likelihood, it doesn't reveal this simple fact anywhere in your documentation provided by your lender. Without a doubt, these are typically immense public government-sponsored business concerns that underwrite the largest number of home loans in the states. There could be a surprisingly excellent chance your home finance loan is covered by Fannie Mae or Freddie Mac, irrespective of who the initial loan was with or even who it was consequently sold to. And you can find out more information about that in a link I provide below this video to see if your home has a Fannie Mae or Freddie Mac backed mortgage. 4. The home financial loan must have already been closed on or before May 31st, 2009. This is really when the majority of the impact and fallout that came about from the breakdown of the home mortgage and real estate market bubble ended. The administration doesn't want those that have taken advantage of the low real estate prices to have the capacity to remortgage again so easily and take equity out of the property when property values go up. The HARP program was created to take care of the people who got nailed hard by the collapse, yet still kept up their mortgage payments. 5. The homeowner loan could not have been refinanced in the past 3 years. Once more, those that purchased immediately after the debacle must not be allowed to reap the benefits of a strategy which is designed to benefit property owners who were seriously ravaged. The newest property owners will need to measure up under ordinary mortgage guidelines as in regular times. 3.3 million Americans are now using a HARP loan Georgia residents can also take advantage of. These Americans are now using President Obama's Home Affordable Refinance Program, often known as the HARP program, to reduce their home loan rates and move into set mortgages from adjustable rate mortgages. HARP allows Georgia homeowners with limited equity in their homes to refinance their mortgages with far more favorable terms. On paper, it's a fantastic program. It allows responsible homeowners to refinance at today's lower rates, even if they have little equity or if their home loan is underwater. It also reduces a few of the documents and expenses needed to refinance. But it has one huge barrier to its progress. Homeowners have to apply to get it. And many hundreds of thousands that are eligible and would gain from it haven't. In early 2016, about 600,000 American homeowners were still eligible for the program and had actually not yet used it, according to the Federal Housing Financial Agency. The states where housing values fell the most in the crisis are still amongst those with the biggest number of HARP-eligible homeowners. The Federal Housing Finance Agency site, HARP.gov, lists Florida, for instance, as having more than 50,000 homeowners who are eligible for the program who never ever applied for it. In Illinois, it's over 30,000. In Georgia, more than 20,000 eligible property owners could take advantage of a HARP refinance loan but have not yet applied. Considering that the everyday applicant will save an average of $1,923 per year after refinancing with HARP, it should be at least worth their time to investigate. It is thought that tens of thousands of Georgia homeowners who meet the specifications but nonetheless don't make an application are not aware there is a fairly good chance they will qualify. Considered one of the misunderstood components of the system is the fact that the mortgage guidelines as established by Freddie Mac and Fannie Mae are very relaxed compared to even HARP Program 1.0, much less standard policies set up by banks in normal instances. Another reason thought to be a roadblock for potential borrowers using HARP was because of when it got its start, 2009. At the time, the United States economy was sinking and home loan interest rates were at an all-time low. Because home values were plummeting as well, some homeowners qualified to refinance with lower interest rates were concerned they would have to take on private mortgage insurance, otherwise known as PMI. For many of these house owners, the added regular monthly expenses of PMI erased the benefits of refinancing to a new low rate. Yet given present interest rates, the typical homeowner stood to save an average of $1,923 yearly. The government recognized this and understood that an additional $1,923 in disposable earnings would help in reducing the instances of foreclosure, would enhance consumer spending, and would ultimately help fend off an economic downturn. Another reason why Georgia residents aren't applying for HARP program mortgages is because they may be tired of refinancing and not wishing to gather their required documents again. Others think that property owners have no idea they're eligible. Let's inspect some of what is available to you should your current mortgage loan be upside down. There are a couple of ways to find out if you're entitled to the HARP program. First of all, you can use government websites which provide 100% free help on how you can qualify for and how to make your life easier with mortgage payments reduced by the HARP program. A good example is the HARP.gov website previously mentioned. The second and simplest way is to talk with a home mortgage lender or mortgage loan broker company who specialize in the kind of mortgages specified by the HARP program. The major upside of the government's HARP home mortgage program was that it enabled homeowners whose loan-to-value exceeded 80% to refinance without a boost in their current private mortgage insurance coverage. This implied that homeowners who had actually initially made a 20% down payment, who now had little or no equity, were eligible to refinance without requiring PMI at all. Today, though, with real estate values rising, HARP's market-specific niche is fading. Less property owners need aid with underwater loans. Between July and September of 2014, Freddie Mac information shows the typical market appreciation of a refinanced house was 0%. This marked the first time in 21 quarters that refinanced underwater home loans failed to surpass refinances for homes with favorable equity positions. That said, HARP continues to be an essential part of the U.S. refinance market, albeit an underused one. Nearly 1 million American homeowners stay HARP eligible, and each stands to save a substantial amount of cash yearly with very little closing costs. The government wants you to understand that you might be HARP loan eligible and that you ought to apply prior to the program expiring at the end of this year. Even as the economic recuperation has mostly taken hold and most of the alphabet soup of financial recovery programs has been wound down, it's excellent news that a consumer program, the Home Affordable Refinance Program, has actually been extended to the end of 2016. If you think you may be eligible, don't delay applying. Because despite the fact the HARP program has been drawn out to the end of this year, there is no knowing what the government will do after. Furthermore, because real estate values are slowly rising, your mortgage amount may slip below the 80% loan-to-value line. and you will not be able to apply for HARP refinance in Georgia. This is Scott Ryan signing off, but before you go, be sure to go down below this video and at the bottom of the written copy to find the resources that I was talking about in this video. And also be sure to subscribe to this channel and forward it to other people you feel might be able to make use of these services. Thank you very much for listening.